Hello and what is going on, lovely people of the internet? It is HOOTMONEY here with another video for you guys today. We're going to be talking about Coinbase stock because this one has been a volatile one, riding the wave of cryptocurrency. So this one's a fun one. So we're going to see if it's a good time to buy Coinbase stock, as it's down a lot since its direct listing, and people may potentially be seeing this as a discount, although there are still many risks involved with buying Coinbase stock. And with the cryptocurrency market in general, it's just very volatile and it's very hard to predict. So anyways, without further ado, I'm going to kindly ask that you guys give me that early like on the video and subscribe to the channel if you want to see more investing content on a daily basis. If you guys want to also check out the link in the description or the pinned comment section down below, you can get up to $50 in free stock by signing up for public. No deposit required, so it's basically free money. So check that out below. Without further ado, let's get right into the video. Alright, so here we are on Google Finance looking at Coinbase's chart real quick. I just want to show you guys how much this thing has died off since its direct listing. So if we go all the way here to the left, you can see that on April 14th, 2021, that's when it had its direct listing, and it was at $328 a share. Now Coinbase is now at $246.93 per share, which is a huge difference in price. The thing has basically only gone down. So why exactly is that? Why is it down so much? So one of the reasons is the overall volatility in the cryptocurrency market. So we'll come here, take a look at tradingview.com. As you can see, this is Bitcoin and each candlestick represents a day. So in the recent weeks, you can see Bitcoin fell from around $56,000 per Bitcoin all the way down to the 200 SMA of $31,000 a Bitcoin, and it almost perfectly bounced off that 200 SMA. Now what that means for Coinbase is Coinbase has a lot of correlation with the overall cryptocurrency market. So if the cryptocurrency market does go down, Coinbase, yes, they can still make money, but likely volume will be dying down as well. So it does have a lot of influence over Coinbase's price. So with that being said, Coinbase will suffer if there is an overall cryptocurrency market crash. And to prove that to you guys, I'm going to show you guys their financials so you can see that their revenue is up 844% year over year. Their net income is up 2,312% year over year. Guys, this is absolutely insane, these revenue and net income growth numbers. Obviously, they're not going to be able to do these type of numbers every single year. That would just be unrealistic expectations. So that increased revenue and increased net income came directly with the increased adoption of cryptocurrencies. So if cryptocurrencies do crash, there will likely be less revenue for Coinbase, which is definitely a huge risk. And we even saw it since its direct listing. Bitcoin crashed and Coinbase went down directly with it. Now that being said, that doesn't mean Coinbase won't remain profitable if cryptocurrencies crash, because they make money off of transactions, not off holding these cryptocurrency. However, this is why I mentioned the volume before, because if there is not as much volume traded on their platform, on the Coinbase website, then they don't make as much money. So people are trading cryptocurrencies like crazy right now. People are transferring their cryptocurrencies. There is quite literally cryptocurrency mania going on right now. And if the volume of all these transactions do go down, Coinbase will not be making as much money. So we're going to jump over to Finviz right here, and we're going to take a quick look at some of their price multiples. So their PE is 103. That is pretty high. However, they are a growth company, so we will let that one slip. Growth companies don't always even report earnings, so the fact that they do have a PE is actually kind of attractive. However, we'll take a look at their price to sales, which I value way more as a growth investor, and their price to sales is 18. So a price to sales of 18, that is in the upper range. I don't like to do anything above 20, so I would still be willing to invest in something that has a price to sales ratio of 18. However, if we go back to what I was talking about earlier, if the revenue does decrease because of a lack of cryptocurrency volume of transactions, then obviously the price to sales would shoot up if they do report less revenue. And with that, that would go out of the range of the price to sales that I am looking for in an attractive company. Now, cryptocurrency volume decreasing, now that is only speculation on my part. There's this thing called crypto winter, which is for a while. It's way longer than the bull run. The past 3 years before 2021 was crypto winter. Cryptocurrencies were not being traded. Cryptocurrencies were going down. Bitcoin reached a low of $3,000 per Bitcoin, all right? And this was in 2018 or 2019. I don't know off the top of my head, but with that alone, you can see how the revenue was so much lower in the prior years for Coinbase. So if the revenue does go down during crypto winter, obviously this price to sales ratio would spike up, which is not a good sign if you want to be an investor. So you have to pay close attention to their revenue. I don't know if they can sustain this revenue growth because it's up over 800% in the year. So that is just absolutely ridiculous. Now, all that being said, if you want to be a long-term investor in this cryptocurrency, almost like a cryptocurrency bank, that's what I see Coinbase as. It's like a bank for your cryptocurrencies, right? So if you want to be an investor in the leading and the biggest cryptocurrency bank, obviously Coinbase is the one you want to go with. There's other ones like Voyager Digital that are publicly traded. However, I think Coinbase is a much larger, and it's just the dominant exchange in the cryptocurrency market. So if you want to be a long-term investor, Coinbase is your best bet. And with that being said, with the volatility, I think there's always a chance you can get it for a cheaper price. I think Coinbase is definitely going to do well long term. I think it's a $100 billion company at least. For what it is right now, it's at $52 billion in market cap. I think it's worth $100 billion. So with that being said, I give a price prediction long term. This is my long term price prediction of $500 a share. So if you come back to me in a month and you say Coinbase is not at $500 a share, then what I will tell you is then average down, do dollar cost averaging. And with that being said, I think dollar cost averaging into a volatile stock like this is the best way to go. If you want to invest $1,000 into Coinbase, I say each month you put in $100 and then in 10 months you built out your full position. Because of the volatility, it's hard to know which price is the best, and if it does drop to a very, very attractive price, let's say it drops in half, it gets to a $25 billion market cap, you can just up your stake. You can be like, oh, I'm going to do $300 this month. That's how I recommend playing this stock. And I'd recommend playing any stock that is a high growth stock with lots of volatility in that way, because you don't want to invest in something when it's at its peak. You don't want to catch a falling knife. You don't want to do any of that. So if you dollar cost average and you do higher weights when you think the price is very, very low and very, very good, that is the way you want to get into something for the long term. Now, with that all being said, as you can see right here, JP Morgan initiates coverage of Coinbase at overweight, says stock can rebound more than 60%. So this JP Morgan analyst sees a lot of upside in Coinbase, and I agree with him. I think it's a $500 stock. Now, that is in the long term. I don't know if I'm going to get a 60% return if I invest in Coinbase right now, but in the long term, I definitely think this is a $400 to $500 stock. Now, another catalyst for Coinbase, very interesting catalyst. We're going to take a look right here, and we can see that Bitcoin is now officially a new asset class by Goldman Sachs. Now, there are multiple different assets on the market currently. However, two most popular ones are, for one, the stock market, and then two, real estate. Obviously, those are two broad categories. You can say, oh, rental properties, single family homes, ETFs. You can do all of those small asset classes. However, I'd like to say that cryptocurrency is the third player in this game. So now we have real estate, stock market, and cryptocurrency as a new breakthrough asset class that people just don't really know how to value because it's so early on in its life cycle. Bitcoin is now considered an investable asset. It has its own idiosyncratic risk. This basically means that it's not really correlated to any other asset class. It's correlated mostly to real estate, which is very, very interesting. Anyways, part partly because it's still relatively new and going through an adoption phase, says Matthew McDermott. It doesn't behave as one would intuitively expect relative to other assets, given the analogy to digital gold. And yeah, that's what I mean. It's not related. It doesn't correlate to any other asset class. That's why it is its own asset class, because of this low correlation to anything else. So Cathie Wood's ARK Invest snapped up more Coinbase shares on the dip. So while Coinbase was dipping, as you can see, this is where Cathie Wood was buying. So she is obviously bullish on Coinbase, as Cathie Wood has been bullish on Bitcoin. I believe she gave a price target of around like $5 million of Bitcoin. I don't know if that's right. It might have been like $1 million of Bitcoin. But anyways, that's absolutely insanity if you ask me, because if Bitcoin got to $500,000, then that would be around the same value as gold's market cap. So Cathie Wood is a hyper growth investor, and yeah, she bought more Coinbase. She's very bullish on cryptocurrency. Now, this article is unrelated to Coinbase. However, the Federal Reserve is going to explore a new digital currency. So what I want to say about that is, what if Coinbase, now this is pure speculation by the way, but what if Coinbase is a main banking account for the digital currencies? Obviously, there will be the Goldman Sachs, the JP Morgans, all these other banks that do traditional finance already, but what if Coinbase gets into that market as well, into a US Federal Reserve digital currency? Then I think that would be perfect for them. They can start doing traditional banking measures with that digital currency. And I think that if Coinbase was a huge player in this new US digital currency, that would give them the absolute edge and send them to over 100 billion to like 200 billion in market cap in the long term. Now, this next article relates directly back to my point where if volume slows down, Coinbase will not have as much revenue. So as you can see, Coinbase CFO maintains bullish guidance that momentum that we are seeing is continuing. So she thinks that all the momentum from Q1 will be continuing into Q2, which would be huge for Coinbase. If they can continue this momentum and continue, let's just say they hold the revenue that they have, they don't even have it grow, that would be perfect for Coinbase, because they've grown so much. All they really need to do is hold that revenue. We shared it on our first earnings call just recently. With the momentum we saw, Q1 had continued into Q2, and we are optimistic at this point that we are going to see similar levels of excitement in volume on our platform that we saw in the first quarter. Now, while the CFO's opinion is that the volume in cryptocurrency trading and investing will continue, this has to be seen as speculation, because they don't know what's going to happen to the cryptocurrency market. Cryptocurrency is completely decentralized. Coinbase CEO really has no say in what happens to cryptocurrency. And obviously, you have to know what's at stake for the Coinbase CFO. Obviously, she's going to maintain that bullish perspective of cryptocurrency because it's what makes her money. If Coinbase's revenue goes down because volume in cryptocurrency trading goes down, then the CFO loses money because she has shares in Coinbase. She gets paid directly off of how Coinbase performs and etc. Obviously, she has a stake in Coinbase. So to summarize basically everything that I've said in this video, I think Coinbase is definitely going to be a volatile stock in the short term, as cryptocurrency in general is in a very volatile state right now. That being said, Coinbase's stock is down 25% in roughly a month since it did its direct listing. So obviously you need to pay attention to the volatility in the short term. Maybe you can scoop up some shares for a cheap price in the short term. However, in the long term, we have to take a long-term perspective on cryptocurrency and cryptocurrency exchanges. So the cryptocurrency growth that we've seen over the past 10 years has outweighed any single asset class. Bitcoin has had an annual return percentage of roughly like 100% per year. So yeah, that being said, volatility in the short term to be expected. You can get a better price, and this would be due to a lack of volume in cryptocurrency trading on the Coinbase platform. Now, long-term, new perspective here, because long-term cryptocurrency has been growing at an absolutely absurd growth rate with its volatility. So with that being said, if cryptocurrencies continue to have this insane growth, I definitely see Coinbase being a $500 stock, hitting that $100 billion market cap. I think that is definitely inevitable in the future. So if you don't want to look at Coinbase for years to come, I think it's definitely a good price right now. It's at a $100 discount to its IPO, and it's definitely going to eventually break through that, in my opinion. I'm definitely bullish on cryptocurrency in the long term. Just short term right now, we're in a volatile time, so that's why I see this volatility sticking with us in the short term. Things to look out for on future financial statements. So we have to look at revenue, guys. This revenue number is everything for Coinbase because their revenue is up over 800% on the year. So if they can't maintain that revenue, if it does die down, if crypto winter is upon us and the revenue ends up going down, then yes, Coinbase will definitely be taking a hit as they won't be making as much money. So we have to have a long-term perspective when investing in this stock. Don't do anything for the short term. Short-term trading, timing the market, etc. will get you killed in the market. So that is my warning for you guys. Don't try to beat the market. Don't try to time the market. It's hard. You are most likely going to get beat by doing that. So that being said, invest in the long term. It's a proven strategy to grow your wealth over time. Things take time. Rome wasn't built in the day, and it's the same way with investing. The best way to invest in a stock like Coinbase is to dollar cost average. So $1,000, we do it month by month, all right? Every month you invest another $100 into Coinbase, and you finally get your $1,000 in. So with that being said, that's about it for the video for you guys today. I hope you guys enjoyed this one. I do like Coinbase. I do like the future of Coinbase, but there is volatility to come. Remember, if you check out that link below in the description or in the pinned comment section, you can sign up for public and get up to $50 in free stock just for signing up, so you can spend that on Coinbase if you want. So definitely check out that link in the description to sign up for public. That's all I got for the video for you guys today. I hope you guys enjoyed, and yeah, that's gonna be it. Peace.